Hello, everyone. My name is Sheila Lamb, and I will be moderating today's webinar. I will begin by introducing the Capital Pathways program, introduce myself, and then pass the mic to our guest speaker, Ford Scott, a lender relations specialist based out of the Richmond, Virginia, U.S. Small Business Administration District Office. He will introduce himself and take us through a presentation on SBA loans. As we go along, please feel free to ask questions using the Q&A function. We will respond to them throughout the presentation. For questions that we can't respond to in this webinar, we are happy to address them through our no-cost one-on-one services or connect you to resources that can help. We will share a recording of the slides of this webinar afterwards. Bear with me one second. So what is the Capital's Pathway Program? It's a program funded by the U.S. Treasury SSBCI initiative, sponsored by the Virginia Department of Small Business and Supplier Diversity, and hosted by the Virginia SBDC and George Mason University. We can start the program interview, then we'll go through the program eligibility and finish up with an outline of the services we offer. Capital Pathways is a no-cost, specialized SBDC program that helps small businesses and nonprofits build the systems and habits needed to become capital ready. Being capital ready matters because businesses that are less prepared can self-select out or fail loan applications. Early failures correlate to lack of adequate capital. Higher cost alternatives don't build long-term capacity. Ultimately, only half of the loan amounts requested reach small businesses. To put things into perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, just 20 to 30% of those who apply actually get their loans approved. To help address this challenge, the Capital Pathways creates a path to financial and legal readiness. Our program offers an immersive hands-on group experience paired with one-on-one support. Sorry about that. I've lost my slides. Bear with me one second. I'm sorry, folks. Pull those back up for you. There we go. Maybe you didn't. Maybe just I lost them. Let's see. Okay, we should be good now. I told Ford I am challenged sometimes when it comes
We
to
can
technology.
see it. We can
We
see
can
it.
see it.
Yep,
Thank you,
yep.
Ford. I appreciate that so much. Okay, so where were we? Let's see. So paths. So who is eligible? I'm going to go back there because I can't remember where I left off, but who is eligible? Very small businesses and nonprofits at any stage who face challenges as accessing traditional financing. See if I can forward this again. Are you seeing them advance? Boy, are you still
No,
there?
we're still on the one that shows that sort of loop. It says immersive hands-on group
Okay.
experience and one-on-one support. So it's still on that one.
I don't know what I've done here. Let's see. Oh, there we go. I hope everyone's laughing along with me right now.
Now we
Okay, so
see eligibility. Yep,
we see who is eligible, right?
yep.
Okay, so we'll go to the next one. We'll get this right. The services we provide include a guided self-assessment, legal structure validation, financial skills and tools, loan application readiness, and credit building advising. We start with a self-assessment that pinpoints your business's key gaps so we can connect you with tailored resources, either through our Capital Pathways program or other resources that can help. Under our legal structure validation, our in-house advisors can help you through basic legal questions, and we partner with a law firm who can help with more complex topics related to business registration, trademarks, and contracts and agreement reviews. We also offer financial webinars on topics like financial basics, as well as financial statement preparation and QuickBooks training. Our one-on-one tailored support covers business foundations, profitability and pricing, financial forecasting, financing options and readiness, financial statements and tools, loan readiness, and lender prep. Bear with me again. Those loan application readiness services include both webinars and one-on-one individualized support. These webinars cover topics such as what lenders look for in loan applications, interactive mock loan interviews, SBA loan options, and sample application analysis. We also have a partnership with a lender that provides one-on-one support to those looking for capital. Finally, our credit building advisor will help you review and interpret your credit reports as part of building an individualized credit improvement plan to strengthen your credit and help you qualify for better financing options and terms. If you're interested in getting started, you can reach out through our website at virginiasbdc.org/programs/capital pathways, or you can use the QR code that you see on the screen. You can also reach out to our program coordinator directly at capitalpathways@virginiasbdc.org, and I will share both the email and the link in the chat momentarily. Now on to introductions. As mentioned before, my name is Sheila Lamb, and I'm today's moderator and serve as the Customer Support Specialist at the Virginia Small Business Development Center, the SBDC. And the SBDC offers the Capital Pathways program. Today's session will consist of a 90-minute presentation. Again, you can feel free to ask any questions throughout the presentation and drop those into the Q&A function. We will be responding to them in intervals throughout the session. We ask that you be mindful that these should be general questions. Those that are more specific to your business or situation are best addressed through our no-cost one-on-one advising services. For questions that we can't address in this webinar, please send us an email and we'll happily respond so we can address them through our services or connect you to resources that can help. I'll share a copy of the recording and the slides of this webinar afterwards, so please be on the lookout for it. So now I will pass things over to Ford to introduce himself and tell us a bit about his background and start his presentation.
Okay, thank you,
Thank you,
Sheila.
Ford.
Yep, thank you. I'm going to share my screen. Okay. Okay, so I'm going to just leave my camera on for a second because my monitor is over here. But thank you, everyone, for participating today. My name is Ford Scott, as Sheila mentioned. I'm what they call a lender relations specialist here in the Virginia District Office of SBA. Our normal function generally is to work with lenders to help them understand our lending programs and help them navigate the process to help in their lending to small businesses. But we do these webinars also for small businesses to let them know about our lending programs and then also to help them prepare prior to contacting a lender. And as Sheila said, you'll get a copy of the slide deck. And now I'm going to turn my camera off. We sometimes have connection problems, but Sheila, maybe you can tell me if these slides are advancing. I hope that slide moved. Okay, so just a quick statement. We do not offer grants here to either start or grow a small business. We do not generally lend directly, except we do have disaster lending programs. If there's an earthquake, a flood, a tornado, something like that, we do have direct disaster lending programs that way. But our main function is to act as a guarantor on loans that are made by commercial lenders. So that would be banks, credit unions. We have some non-bank lenders. And what that means is if the small business borrower defaults, SBA will reimburse that lender for a portion of their loss. And that's SBA's way of encouraging banks, credit unions, et cetera, to lend to small businesses. And that guarantee can help that lender offset some of the risk associated with, for instance, startups. If there's insufficient collateral, that's a big one. Lenders will use our programs related to that. Some non-standard repayment terms, and then maybe there's some industries that the lender is not comfortable with. They may be willing to make the loan if they have the SBA guarantee. I did want to cover a few instances where, cases where a business or might be ineligible. So nonprofits are not eligible under our lending programs. The second one, we get many calls related to this. You cannot use an SBA, any of the programs we're going to talk about today, for investment property. So if you're going to buy a building and then rent it all out, let's say it's an apartment building, mobile home parks, shopping centers, those would all be ineligible. We want to see that your business is going to occupy a certain percentage of the building that you're either going to buy or construct. If you happen to be a licensed nursing home or assisted living facility, though, and you do provide health care and other medical services, that would be eligible. But if you're just providing room and board with no health care or medical services, then that would also be ineligible. We do not allow businesses using a pyramid or multi-level sales distribution plan. Any business that's involved in any activity that's illegal on the federal, state, or local level are not eligible. So an example of that would be, in some states, marijuana is legal. If it's illegal on the federal level, it would not be eligible for our lending programs. Any business that restricts patronage for any reason other than capacity of the building, for example, a men's only or women's only health club or some other facility like that, would be ineligible. And then if the business has an associate, and what we mean by an associate generally is somebody who owns 20% or more of the business, if they're currently incarcerated, serving a sentence of imprisonment, or is under indictment for a felony or any crime involving financial misconduct or a false statement, they're ineligible. And then we do have, if your business has received some sort of federal government loan in the past, and there was a loss on that where you didn't pay the full balance, or the loan is currently delinquent, you would not be eligible for an SBA loan. And then effective March 1st, SBA requires that 100% of all direct or indirect or indirect owners of the small business applicant be U.S. citizens or U.S. nationals. Legal permanent residents are not eligible to own any percentage interest in an applicant for an SBA loan, application for an SBA loan. So the next three slides we're going to cover are our three main lending programs. We have the 7A program, the 504 program, and then we have a microloan program. So the first program here is our 7A loan program. It accounts for probably at least 90% of our total financing, at least by numbers. And you'll see there on the slide, pretty much any legitimate business purpose is eligible for financing. So I already mentioned, you can acquire, refinance, or improve real estate buildings. You can also use it for constructing, again, owner-occupied. We call it owner-occupied commercial real estate. Short and long-term working capital. You can refinance debts. You can purchase and install machinery and equipment. Purchase furniture, fixtures, supplies. We do finance also changes of ownership, business acquisitions, partner buyouts, those sorts of situations. Franchise operations. We do have a directory. This is not something you have to worry about, but the lender is required to check our franchise directory to be sure that the franchise is on that. But again, that's not your responsibility. And then the maximum loan amount under this program is $5 million. The specific circumstances related to how the loan is structured and the loan approval process will be handled by the lender. So that will be worked out between you and the lender, and then they can help you figure out which type of loan is best suited for your needs. We will send out after this webinar a loan chart which outlines our different lending programs, and it'll have on it information like the maximum loan amount you can get under each program. The SBA, we'll get into this in a minute, but SBA sets maximum maturities and maximum interest rates, and you'll see that on the chart, but the lender is permitted to set that with you. So you'll receive that after the webinar today. Actually, before we move on to the next program, I did want to mention some assistance for manufacturers. So there's generally an upfront fee that is associated with SBA loans. It's called a guarantee fee, and we are waiving that if the small business is a manufacturer in the NAICE sectors 3.1 through 3.3, and the loan size is $950,000 or less. So there will be no upfront fee if you're a manufacturer. There's also a Made in America red tape hotline where if you are a small business and you are subject to excessive costs related to some sort of federal regulation, you can actually, the link here on the left, you can use the link and you can fill out a form they have there, or you can call that phone number. There's also what they call an onshoring tool, which helps connect businesses with verified U.S. manufacturers, producers, and suppliers. If you need that information, you can access that. I guess, again, these links will work when you receive the PowerPoint. We also have several lending programs. There's a new, what they call 7A Manufacturers Access to Revolving Credit, which is offering working capital up to $5 million. Again, if you're in that NAICE code 3.1 through 3.3. And then we have, effective May 1st, we expanded, or we sort of changed, I don't know if you want to say change we did change the policy slightly. We have an international trade loan program, and that obviously can be used for exporting, but there's a component related to it that is designed to help businesses that have been adversely affected by import competition. So this link here will provide more information on that. What they've done is they've taken certain industry NAICE sectors and made them they're presumed to be affected by adversely affected by import competition. So if you're in one of those NAICE codes, you would be eligible for that. And then we have a working capital pilot program. Again, as you can tell from the title of that, it can be used for working capital, and it's available up to $5 million. And we'll also send out a chart. I think we have a comparison chart on that, and we can send that out to you. So the second program I mentioned is the 504 program. This program can only be used for two purposes. One is either the purchase, renovation, or construction of owner-occupied commercial real estate, or the second use is long-term machinery and equipment. So that equipment has to have a useful life of at least 10 years, and it's generally something that's put in place and stays in place. It doesn't move around, so you can't finance things like trucks through this program. The old example used to be a printing press. That's a very large machine, and it's put in place and stays in place. So the way this program works, you'll sometimes hear this program described as the 50-40-10 program, and that's because a commercial lender will provide you up to 50% of what you need. SBA comes in for generally 40% of your financing need. And because we are involved in that 40% piece, there are definite advantage to the small business as a result of that. So we offer a 25-year term. If you're talking about real estate, we will offer you a 25-year term and an fixed interest rate that is generally lower than conventional financing. So you will know what your payment is for the next 25 years. And again, it's generally going to be lower than if you went and got a conventional loan. And then the third benefit to this program is you can finance some out-of-pocket costs that would normally have to be at loan closing, which can be a substantial amount. So And then the 10%. So I said 50% comes from a lender, 40% generally comes from SBA, and then 10% is your requirement. You would have to come to the table with a 10% cash injection. That can go up by an additional 5% if you are a business that's 2 years, less than 2 years old. And then it will go up by an additional 5% if uh, you are buying, constructing, renovating what we call a special use property. And some examples of that would be, a hotel or a gas station where it's difficult to convert it for resale. But most of the time it's 10%. Um, and generally, the 10% is generally lower than what you'd be able to get conventionally, and maybe even if you get up to the 20%, potentially that would be less than what a conventional loan would require from you. And then you can combine the 7A program that I just discussed with the 504 program. We see that on a regular basis if you happen to be buying a business, so you could finance the real estate through the 504 program, and then uh, the rest of it through the 7A program. And then our third main program is our microloan program that can provide loans up to $50,000. This program works slightly different than the previous two I discussed. SBA lends money to what we call micro intermediary lenders, and then they turn around and lend the money directly to the small business. When you get this PowerPoint, you can click on the link and it will take you to a list of those lenders. This program can be used to finance a variety of purposes, including working capital, inventory, supplies, furniture and fixtures, and machinery and equipment. It cannot be used to purchase, and anything involving real estate, you cannot use this program for that. But you also can refinance debts using this program if it improves your business cash flow position, your debt position. So I think Sheila and I agreed we might stop every so often, so to see if there are any questions. So Sheila, do you want to do that now?
Sure, we do. We have four questions that have popped in forward. So let's see. The first question, if a loan is not approved, can the application be strengthened and resubmitted, or is it a one and done?
Oh no, definitely. Generally, what SBA will do is if it's declined by SBA, we will let the lender know why, and then we generally say in the letter if that can be overcome, the loan can be moved forward. But no, it's not a one and done. Uh, you could definitely talk to the lender and see how you could overcome that, and then just file or update the application.
Great, thank you. Next question. Can a lawful permanent resident, a green card holder, apply for an SBA 7A loan, or is U.S. citizenship required?
Yes. Well, unfortunately, as of what did I say, March 1st, a legal permanent resident cannot own any percentage of the small business applicants. So it's only U.S. citizens or U.S. nationals.
Okay, thank you. Next question. Is the SBA guarantee fee a percentage of the loan or a standard fee?
So that's a good question. So on the chart that you will receive, you will see how it's calculated, and the fee is never calculated on the full loan amount. It's always on the guarantee percentage. So the lender would take the loan amount, multiply it times whatever guarantee we're offering that lender, and then multiply it by a percentage. It ranges from, well, it depends on the loan amount. So it can range, 1 to 3%, but the other thing I should mention about the guarantee fee is you can ask the lender to finance that fee, so you will not have to pay it out of pocket. Many lenders will do that. And if there's room, if you're not at the maximum loan amount, then you could do that. But you'll see the calculation on the chart when we send you the chart.
Okay, great, thank you. And we'll do one last question right now. Would a car wash be considered a special use property?
I would say yes, because when they're talking about a special use property, they mean that when you look at it, you say to yourself, well, what else could that be used for? And because a car wash has the stalls normally where you wash the cars, I can look that up and see if it's specifically mentioned in our policy document, but I'm almost 100% sure it would be considered special use.
Great. Thank you. Okay. I would say continue and we'll handle more questions in a little while.
Okay, so
Thanks
now we're
for,
going to move on to what to do before approaching a lender. As Sheila mentioned in her introduction about the Capital Pathways program, preparation is key. So, how you present yourself, how well you are prepared to answer questions that the lender might ask you. I usually describe this, you should try to go into the meeting or call with the lender sort of thinking like a lawyer. They tell lawyers when they go into court, you should be prepared to for questions that the other side might come up, ask you, or the judge might ask you. So you should try to think ahead. I'm not trying to say, be nervous about it. Lenders are people, so, but just be prepared. Think ahead and think, well, what could the lender ask me about, my competition, my cash flow projections, even my background, what my experience is and things like that. So you need to be prepared for that. And one of the best ways to improve your chances of obtaining a loan is to either prepare a business plan, and Sheila's group can help you with that, or a written loan proposal. And the main difference between those two would be a business plan is sort of the overarching document that you use to run your business plan your business, and the loan proposal is a more streamlined document that is focusing on specifically your attempt, your application, your attempt to get a loan. And lenders will look at that business plan or loan proposal as some sort of evidence that there's strong management experience, you understand your marketplace, your competition, definitely your financials, because as you can guess, the lender's main interest is going to be in the financial information. And we'll send you after this session a separate PowerPoint that we have on that I presented on how to prepare a loan proposal, so you have that. But you'll see at the bottom of this slide, before you approach a lender, we generally say that you should have four things in mind at a minimum. The first one there is how much money you need. So I usually describe this as business lending is not like mortgage lending or auto lending. I bought a car last year. I went to my lender and I said, how much do I qualify for? And they sent a figure back, and then I went out and bought a car. But that's not the way that business lending works. When you go to a lender, you should have a specific dollar amount in mind and be able to break down what the uses of that money will be. So you should definitely come to the table with a dollar figure. I would not recommend that you go to a lender and say, how much can I get? That doesn't go over well with them, because when you think about it, when you're applying for a business loan, there's a purpose for it. You're not generally just, taking out a loan to have the money sitting there. So again, you should have a dollar amount in mind, and then a breakdown. The second bullet here, how you will use that money. The third bullet, of course, is the very important to lenders, how you repay it. So if you're an existing business, they'll look at your historical financial information. If you're a startup, they will want to see cash flow projections. And generally, for a startup, they're going to want to see month-to-month projections. So, for example, if you're going to ask a lender for some working capital, they would want to look at that cash flow projection to see what the shortfall is. Let's say you give them a dollar figure, they're going to look at the cash flow projections to determine whether that figure seems reasonable based on the shortfall in, let's say, the first 3 to 6 months of your business operation. And then the last one there, what you will do if you're unable to repay the loan. So I mentioned at the very beginning of this webinar that one of the advantages of using SBA programs is that we will accept less than a loan that is not fully collateralized. So our policies, we do have policies. So we don't. There are some cases where we will, we first look at the business assets. Well, actually, I shouldn't say we. The lender will look at the business assets. If they do not fully secure the loan for our larger loans, then they will look at personally held real estate. But what I'm getting at here with this last bullet is, if related to SBA, is if there's still a shortfall, but repayment ability is shown, we're fine with that. But you should be able to explain to the lender what your business collateral is, and then potentially what your, if you own personally held real estate like a residence or investment property, you should be able to discuss that. So generally, in terms of credit history and credit reports, we were asked on a regular basis, will the lender pull my personal credit history? And most, if not all, lenders will. They will pull a credit score or a credit report and a score for every 20% or more owner of the business. There are three major personal credit bureaus: Equifax, Experian, and TransUnion. And before you even start your application, your loan request, I would recommend that you get a copy of the report and check it for errors. I read an article a while back. It says something like 25% of personal credit reports have errors on them, so it's worth checking. And then try to clear up any, if you have any past due accounts and you're able to clear those up, I would definitely try to clear those up before you approach the lender. You'll see the third bullet here. You can get a free copy of your personal credit report from this website here. I actually do this myself. You get one free copy from each of the three credit bureau agencies, so Equifax, Experian, TransUnion. It won't give you your score. You'll have to pay extra for that, but it will give you the free credit report. If you happen to need credit counseling, we can't provide a list here. We don't have a list here, but the state corporation does publish a list. And I would just recommend doing your due diligence to be sure that any credit counseling service is, reputable before you engage with them. And then there are commercial credit reporting agencies, so that would be on the business. I've given you the links here. There's Dun and Bradstreet, Experian, and Equifax. And I tried with these links here to take you to the place where you could find free information if they have any, information on your business, and it's free, but they do charge for things. So just, be careful. We're not recommending that you do that. It's your choice, but they do charge for things like if you wanted to sign up for a monthly monitoring service or something like that. So what a lender will look for when reviewing your business loan application, we've covered some of this. So owners and operators of good character, one of the main ways they make an assessment related to that is looking at your personal credit report to determine whether you've been willing, well, personal and business credit reports to determine whether you've been willing to meet your debt obligations. We talked about a feasible business plan, management expertise and commitment necessary for success. So one comment on that is if you're running your business and you don't have hired managers, you would just talk about your background. But if you are going to have a hired manager and you're relying on them for a lot of the day-to-day or even some sort of specific industry experience, you definitely want to discuss their expertise. Sufficient loans, including the SBA guaranteed loan to operate the business on a sound financial basis. Again, they will look at your either your historical or projected financials to determine that. Adequate equity invested in the business. SBA does set under some of our main 7A program for larger loans a minimum 10% for startups. But the lender is permitted to set their own equity injection requirement, so you should ask the lender for that information, and they can provide that. Sufficient collateral, we talked about that a minute ago, so you should just be able to outline what collateral you're offering. And then the last bullet here, it's in red because, again, it's of primary importance to the lender. So the ability of the business to repay the loan on time from either historical or projected cash flow of the business. A couple of common questions about applying for an SBA loan specifically. Do you apply directly through SBA? So no, you always apply directly through an SBA lender. As I mentioned, we don't lend directly. And the lender will, in terms of the paperwork, we're going to go over the paperwork. And I would say, given what we're going to cover, it would probably cover most things, but each application is different. So the lender will outline for you what is specifically needed in your circumstances, and you would just provide that information back to the lender. So now we're going to talk about the documentation needed to apply for an SBA loan. All of the programs, so we talked about the 7A program, the 504 program, and the microloan program. This is specifically related to 7A loans, and then we'll talk about 504 and microloans in a minute. But so for all types of 7A loans, there's a borrower, they call it a borrower information form. It's filled out by the business. It's not required by every owner of the business. So you fill it out, and then one person who's authorized to sign on behalf of the business signs that, and then you provide that to the lender. And when you get this slide deck, you'll be able to click on that and see what's needed. A personal financial statement from every 20% or more owner of the business plus guarantors will be needed. It has to be signed and dated, and it has to be no older than 120 days at the time submitted to SBA. And it does need to include the assets of the owner's spouse and minor children. If the spouse and obviously the minor children would not be involved in the business, but the lender needs that information on the form to make an assessment. And if you wanted to look at what is usually required on a personal financial statement, you can click this link. SBA provides a form. It's called a Form 413. And that can give you an idea, but the lender is permitted to use their own form. So it would just depend on the lender. If the lender is charging you a fee greater than $2,500, there's sort of, if you want to call it a bureaucratic form that has to be filled out. You can look at that at this link here. And then the lender is required to obtain federal business income tax transcripts from the IRS for the last 3 years on the business that's applying for the loan. Obviously, you can tell by that if you're a startup, this would not be a requirement. We do not require the lenders to get personal income tax transcripts, only business income tax transcripts, but they will be required to get that. And what they do with that information is they look at it to be sure you're small, because they can't make a loan to a business that is large under our programs. And then the main reason that they're getting that information is they're going to compare the business income tax transcripts from the IRS to the financial information that you provided to them. And you want to make sure that those match, because if they don't match, that could be a problem. We saw that with the pandemic, where businesses were applying for an SBA loan, and we got a copy of the transcript from the IRS, and it didn't match their financial information that they submitted. So that's a way to eliminate fraud, to be sure there's no fraud happening. Also, the lender is generally going to require, if you've been in business at least a year, they will require copies of your business financial statements from one. If you're only in business for 1 year, they'll require one, and then two, and then three. But if you've been in business for 3 years, they'll require 3 years. If you're a startup, as I mentioned, they'll want to see monthly cash flow projections for at least the first year, or until you have positive cash flow. They will want to see evidence of all licenses and formation documents required to operate the business. For example, a business license, articles of incorporation, organization, partnership agreements, etc. They'll want a description and a history of the business. So the nature of the business, what actually you do, and what you sell or what service you provide, length of time in the business under current management, depth of management experience. We talked about that. So if you have a hired manager, you should talk about that, and how that manager will handle the day-to-day operation. And if this information in this second bullet is in your business plan, you don't have to prepare a separate document for that. So we talked about the business financials already. They'll want the historical information if you've been in business. They will also ask for an interim financial statement. So what are we in? We're in July. So they would have your last year end, but they're going to want an interim statement showing where you are as of this point in time. And then if they obtain, or when they obtain your business financials, if you've been in business but there's not sufficient cash flow shown, then they may also ask you to provide projections in that case. And we've talked about the projections for new businesses. I've given you a link here to a template that you can use to prepare that cash flow projection, but also Sheila's group can help you with that as well, reviewing those with you and providing assistance. We talked about the equity injection, so you should discuss in your proposal or your plan the cash equity injection you're willing to provide, and then the lender will discuss, as I mentioned, with you what their minimum is, and then you can have a discussion between the two of you If you're an existing business, they'll need a current debt schedule, which includes all outstanding business debts, including any shareholder debt. And I will send after with the PowerPoint, a an example. And basically, what the lender wants to see is who the creditor is, what the original loan amount was, what the interest rate is, what the maturity is, and what the current balance is. And hopefully, you also be able to indicate that the debts are current, that you're current on your payments. If you're refinancing debt, you would need to provide the lender with a copy of the promissory note and a payment schedule showing that the debt is currently current and that it's been current for the last 12 months. If you're renting space, you'll need to provide a lender with a copy of the lease. And just for your information, SBA requires when you're leasing space that the lease term, including any options to renew, would at least equal the loan maturity. So if the lender is going to offer you a loan maturity of 10 years, your lease period would have to be at least 10 years, including any options to renew. If you're a franchisee, you would need to provide a copy of the franchise agreement that you're signing with the franchisor and the franchise disclosure document and any other documents that the franchisor is requiring you to sign. So you would provide that to the lender. You should mention any federal, state, or local citations which would preclude the applicant from normal business operations. Discuss any liens, judgments, bankruptcy filings, or pending litigation. A couple of comments on that. So SBA does not have a hard and fast rule that if you've had a past bankruptcy filing, it's an automatic decline. We let the lender make that assessment. So generally what they're going to be looking for is that you have reestablished credit. So yes, you did have a bankruptcy, but since then you have some new accounts and you've been paying those on time. That's what the lender will generally look for. And then in terms of divorce proceedings, the recommendation on that is if you're in the middle of a divorce proceeding and you cannot provide to the lender how the assets will be distributed between the parties, we recommend that you wait until you can provide that information to the lender because they will need to make that assessment when they're considering the collateral. If you're buying equipment, inventory, or other assets, you'll need to provide a lender with a detailed list of what's being purchased and the cost quotes that you've obtained. And you should obtain those quotes. You shouldn't just, pick a figure out of your head. You should go to some vendors and find out what those costs might be so you can provide it to the lender. And then we talked about the collateral several times, a detailed listing of all business and personally held collateral to be offered. If you happen to be buying an existing business, the lender would need to see a copy of what they call a buy-sell agreement or a business purchase agreement. The second item here is you do not have to handle this. You'll see that in bold here, but it's just information for you. SBA requires that the lender either prepare themselves or go out to a third party and get a business valuation. The reason I mention that is that the cost of that potentially could be passed on to you. And just an FYI for you, SBA or the lender cannot accept a valuation that was prepared either by the buyer or the seller. So the lender has to order it, and it has to be delivered directly to the lender. The lender will want to see a pro forma balance sheet for the business being purchased as of the date of the transfer. That would outline the assets and the liabilities and net worth of the business after the transfer. Just like we said with in terms of financial statements, you'll need a copy of the seller's financial statements for the last 3 years, and then potentially an interim statement if you're not near the end of the year. And then just an FYI also, SBA has a policy related to changes of ownership that the change must promote the sound development and or preserve the existence of the business. So we're not really here to finance a situation where the buyer's getting a great deal, the seller's getting a great deal. That might happen, but we want to see some sort of benefit to the business itself as of the change of ownership. So, maybe you had somebody who ran a business for 30 years, they want to sell it. They want to sell it, and if they didn't sell it, they would shut it down. Well, that's helping preserve the existence of that business. If you're buying real estate, you would need to provide a copy of the signed purchase agreement. And again, it's not your responsibility, but there's potentially related when you're buying real estate for an environmental investigation, and that cost potentially could be passed on to you. And then, of course, the appraisal for commercial real estate, we require the lender to get an appraisal, and that would be the cost of that would be passed on to you as well. A couple of notes about loan closing costs. So SBA does permit the lender to collect just like on non-SBA loans, necessary out-of-pocket expenses such as filing or recording fees, photocopying, delivery charges, collateral appraisals. I mentioned that a minute ago, and then potentially environmental investigation reports. And I just mentioned the appraisal evaluation costs. So now you can, just like I mentioned earlier about asking the lender to finance the SBA guarantee fee, you can also ask the lender if they would be willing to finance the loan closing costs in the loan, and many of them are willing to do that, but you can ask the lender. SBA does have a requirement under all of our programs that every 20% or more owner of the business must provide an unlimited full guarantee, personal guarantee. There are some cases where somebody who owns less than 20% potentially could also need to personally guarantee, but it'll depend on the circumstances. And you can review if you like. I've given you the link here to SBA's personal guarantee form so you can understand what's on it. We do permit the lender to use their own form, so it may look slightly different when you get your loan. And then just to help you understand what a personal guarantee means for you, I've included this link here. It's not an SBA website, but it's Investopedia. They outline what a personal guarantee is. Okay, so I think we'll stop here because that's the end of the 7A documentation, and then we were going to cover the 504 and microloans. So do we have any other questions, Sheila?
We do. We have a few questions that have dropped into the Q&A. The first question, I have all items ready for the microloan application. How do I get in contact with an RLM? RLM, sorry.
That's where I don't want to backtrack. Actually, let's see. Yeah, when you get the slide deck, you'll be able to click on this link here and see the microlenders. I can tell you, so we're in Virginia, and we do have 4 microlenders that cover different sections of Virginia. There, we do have some gaps, unfortunately. We have a gap in the Richmond area and then the Hampton Roads area, but we have a lender that covers far southwest Virginia and a piece in northern Virginia. We have one in Charlottesville that covers that area, and then down into the south side of Virginia, Danville, Martinsville, sort of that area. And then we have one covering northern Virginia, so Prince William County, that area. And then one microlender in the Stanton-Waynesboro area. They cover that area. So you'll get that link when we send the PowerPoint.
Great, thank you. Next question, can a manufacturing facility be considered for a 504 loan?
Oh, definitely. Absolutely. As long as it's, as I said, and it sounds like it would be, owner-occupied commercial real estate. I didn't want to give, this slide deck has a lot of details in it. I didn't want to overwhelm you, but
Sure.
just for your information, if you're buying an existing building, to meet our requirements of owner-occupied, we require that the business occupy at least 51% of the rentable property. So as long as you meet that requirement, it would definitely be eligible for all of these. Well, the 7A and 504 program, as we said, real estate is not eligible under microloan, but definitely under 504.
Okay. There was a second part to that question. What is the timeline for approval from the time it's submitted?
And I'm assuming they're asking about the 504
The
program. So,
504,
okay, yeah.
correct.
So all of we haven't covered this yet, but you would apply for that program through what is called a certified development company. That may have been on the earlier slide, and you'll have a link for that. There are 3 of them in Virginia. They're all very competitive, and they also have a designation that allows expedited processing. So I can't really give you an exact figure. I would say if you're going to compare it to a 7A loan, it's potentially going to be a little longer, but I wouldn't say much longer. So normally under the large 7A loans, we say about 2 weeks, 10 business days. but for 504s, it's probably going to be longer than that. And we haven't gotten to this yet, but a lot of the delay in these applications is the back and forth between the borrower or the applicant and the lender. So as long as you keep on top of that and you give the lender what they ask for, it should move pretty quickly. But I'd say for 504, probably at least 3 weeks. I don't know, potentially a month, but
Okay, great. Thank you. Next question. How does the 7A or 504 loan work for women-owned small businesses?
well, our programs are open to everyone. We don't have any special items, if you want to call them, for women-owned businesses, but women-owned businesses are definitely eligible for any of these programs that we've talked about today.
Great, thank
So,
you. Next question. Can you expand on collateral? I was told a life insurance policy is collateral. Where can I find more information on this? And what if you don't have sufficient collateral? What can you do?
okay, so this is getting into the weeds a little. SBA does set, especially for our larger 7A loans, a requirement that the lender get what they call key man life insurance. So that would be somebody who's, critical to the operation of the business. But they only are required to require that life insurance when there's a shortfall in collateral. So again, when lenders looking at collateral, they first will look at your business assets. They will calculate uh, a collateral value, and I don't want to fill your head with too much stuff, but they use discount value so that, like, for instance, if you tell them your commercial property is worth, I don't know, $1 million, they have to discount that by a percentage, and then that's the collateral value. But anyway, they look at your business assets, they add all of that up. If that does not fully secure the loan, meaning that value does not equal the loan amount, then they look at your personally held real estate, so your residence and or any investment property. And then if there is still a shortfall, then SBA requires them to get key man life insurance for a larger loan. So that's when that comes into play. Now I should say all of these programs, SBA sets policies, but what I should say is we set our policies. As long as the lender does not violate one of our policies, they're permitted to set their own policy. So even though SBA may not require it, the lender in some cases may require it. It'll depend on the lender.
Okay, great. Thank you. Let's see. Is it more advantageous to go through specific lenders or to go through a lender the borrower has a relationship with, such as their personal bank or credit union?
Well, definitely. You've hit on something that we recommend on a regular basis. You should first start where you have some sort of account because that lender knows you. Your account is there, and hopefully you have a good history with them. If you have a mortgage with them, a home mortgage, an auto loan or something, and you've been current on that would be a positive. And of course, lenders are always wanting to retain their customers. So I'd first start with them. We're going to talk about in a few minutes. We provide a couple of resources for finding SBA lenders, and we're going to talk about that later. But yeah, we would recommend first start where you have an account. If that doesn't work out, you could try a different account. And then we're also going to talk about later some ways that you could hone in on if you're looking for a specific dollar amount. We have a website where we list our loans, and you could look at the lenders that maybe lend in that average dollar range.
Great. Thank you. And the next question, you just mentioned you're going to share how to find what SBA lenders, but someone is asking, so I'll put it out there. Do you know if Northwest Federal Credit Union is one of the SBA lenders?
I don't know off the top of my head, but I can look that up when we get through the slide deck.
Right. And you're going to share that information, right? So they can look it up too.
Well,
Is
they
that
won't be
correct?
able to look up that.
Okay.
What I'm providing is a list that we maintain, and then there's also a system called Lender Match that can
Okay.
connect them to lenders, but they can't look that up themselves to find out if they're an
Okay.
SBA lender. Yeah.
Okay. All right. Thank you for that clarification. Let's see. We have one more question right now. Do you have to be an owner to provide guarantees?
Well, no. In fact, if you have somebody that's willing to personally guarantee a loan on your behalf, the lender would love it, probably. I mean, anything that would be extra security. But the SBA requirement is that every 20% or more owner must, and it cannot be waived. But no, if you had a relative or I don't know someone like that that was willing to personally guarantee in addition to your personal guarantee, the lender would that would be a plus on your side. They would consider that a plus.
Great. One more question popped in, and then we'll go back to the presentation. So when we get ready to apply for a loan, do we meet with the SBA or just meet with the lender?
Well, the first thing I would recommend is uh, have someone review your proposal, and that's where Sheila and her group can help you. It's never a bad thing to have somebody check behind you. Uh, and
Absolutely.
then and then you would meet directly with the lender. You would not come to SBA because we do not make the loans. The lender makes the loan. So you would just prepare, make sure you got it all together. Again, make sure you're anticipating questions you might be asked, and then you approach the lender directly.
Great. Thank you, Ford. We can go back to the presentation and we'll handle any other questions that come in afterwards.
Okay. So related to the 504 loan program, the good news for you is that the CDC, I mentioned the Certified Development Company, they are very helpful. They will walk you through all this, and we're not going to go through many slides on this, but there's this form here that you'll see on the form 1244, which outlines the application documentation, and you'll see I've put in bold here the pages 1 through 4 are completed by you. So if you wanted to get yourself ready, you could fill that out or be prepared to fill that out. And then on that checklist, there are some items that they're the responsibility of the CDC, and then I've outlined here the exhibits that you would be asked to provide. So those 3, 5, 6, 7, 8, 9, etc. That would just give you an idea of it. It's going to be very similar to what we covered on the 7A side, but you can look at that. And again, you're not required except to fill out that page 1 through 4. The CDC is going to fill out the rest of it, so it's their responsibility to handle that. And then in terms of the microloan, each microlender will have their own documentation, so we do not have copies of that, but at a minimum, they'll each have their own application that they want you to fill out, and then they'll ask you for probably similar things to what we've been asking. Although with microlenders are mission based. And what I mean by that is they work with small businesses and in some cases, as you can tell, micro businesses. And as part of this program, technical assistance is included with the loan. So they also may in some cases accept lower credit scores than a traditional bank or maybe even a credit union would. But they're used to working hand in hand with the micro businesses. So uh, they may not require as much as I've outlined on the 7A program, but they'll be able to provide that information to you. And we did want to cover just a couple of, we've been asking lenders for advice that they would give to small businesses that are applying for a loan, and we got a couple here. So one big item is projections. You've heard me mention that, especially for a startup. And you want to make sure that those projections are realistic and attainable. What we hear from lenders, you may have heard this phrase "pie in the sky." The applicant just pulled a figure out of their head and they can't really back it up with anything. That's again where Sheila's group could help you with that. They can look at your projections and help you determine whether they're reasonable. And then most lenders will use what they call industry data. Uh, you'll hear the term RMA industry data, so it's through Risk Management Association, and that data gives them things like gross and net profit margins and other business metrics that are based on industries. So, and they usually break that down by NACE code. And that gives the lender an idea of, if you give them a projection and your metrics are way out of line with those industry averages, that's going to raise a red flag with that lender. And I've given you a link here to some of those financial ratio terms, and you can look at that. And then the other item here, importance of complete application. So I mentioned this earlier. You go to the lender, talk about applying for a loan. They will give you the documentation that you need to provide to them. And let's say you give all of that back, and then the lender sends you an email or communicates with you and says, I need 5 items. If you only return 2 of those 5 items, you would think that the lender can move your application forward, but that's not what's going to happen. They're going to put it aside and work on an application where the person sent back all 5 items. So just be sure that you respond and provide them what they need. That again, usually the delay in these applications are the back and forth between the lender and the business. Okay, so here's where we're getting to how you can find an SBA lender. So our office maintains a list, and we've provided a link here. We try to have a contact at the lender that has some SBA background, so you can use that there. And you'll see in many cases there'll be a location for that lender, and in some cases we've actually even listed the counties and cities they cover. But you're welcome to use that. And then I also mentioned the lender match. We have a lender match system. Unfortunately, this is a system that you have to have a user ID and password for, but that's really to protect your information. So you go to this website, you log in, you provide information about your business and your application, your financing need, and then that gets sent to any lender who has signed up for where your business is located. If the lender looks at your information and they say, we're interested, they will opt in, and then you will get a final list of lenders, and it'll be your final choice, which lenders you communicate with. I did want to mention, and you'll see this on the slide, there's one caveat about the system. So every lender that's on this system is an SBA lender, so you don't have to worry about spam or things like that. But one thing we really can't control, and it sometimes happens, is that the SBA lender may refer you to a non-SBA option. Maybe they have a partner they work with or something like that. So just be sure, if you the lender gives you an offer, and let's say it has an excessive interest rate or a very short loan term or something like that, that's your clue that it's not an SBA loan. So it's your choice whether you want to enter into those arrangements, but just be sure once you get outside of the SBA arena, we can't control any of that. So you heard me say for SBA loans, we set a maximum interest rate, we set a maximum maturity, and things like that. But once you get outside of the SBA arena, that would not apply. And I also mentioned the way that potentially you could find, if we have time, I can show you this. There are reports, I think they're on a weekly basis now, where we post what are called SBA lending reports. And this will give the name of each lender, each SBA lender, the total number of loans they've made in the current fiscal year, the total dollar amount of those loans. And then over to the right-hand side, there is an average dollar size. So that's where I mentioned earlier, you can use this website if you're looking in a specific area. You could look at that average dollar size, especially if it's a smaller loan, and you may want to focus in on the lenders that have that smaller average dollar size. And then the main way this can help you is to determine which lenders are most active in our territory. Now, the top link here is to our office. We cover all of Virginia, except you can see here Arlington, Fairfax, Loudoun, Alexandria, Fairfax, and Falls Church. But I have also given you the link down here at the bottom for the office that covers those Northern Virginia counties. And then you can, if you're outside of Virginia, you can use the drop down at this website to look at different areas around the country for the same information. And that's the end of the slide deck. Let's see here. I can actually, unless Sheila, if you have more questions, I can show that site that I just mentioned.
We do have two questions. Do you want to show the site first, or would you like to handle the
Let
questions?
me do that real fast. It'll just take
Okay,
a second.
great. And for anyone who has questions, if you could drop them into the Q&A, that would be great. Thank you. We still have about 25 minutes to pick Ford's brain.
Okay, share. Okay, so you should be seeing it.
Yes, 7A 504 District Office Lender Report.
Yes, yes. So see here, you'll see the lender name. And actually, I can sort these in descending order by number of loans made. So that's another thing you can do is to see the lenders that are making the most number of 7A loans, and then it'll give their dollar amount, the total dollar amount, and then, as I said, over to the right. So let me see if I can sort this by size. See, so you've got some lenders, their average loan size is small. So again, that might be a way to help you clue in for a specific loan range. And then you can go back several years. So we're in the current fiscal year, which ends September 30th, but you can go out to back to 2025, for instance, and look at that. And then over here under district office, if you're not in our territory, you can go to all different states and see that information for them as well. So that's all I wanted to show on that, Sheila. You're on mute, Sheila. Yeah, we still can't hear you.
I turned that off while you were talking. Sorry about that. I would love for you to come back on screen and share the space with me, and we'll
All right,
go over these
okay,
couple extra questions that have come in.
okay.
Thanks. So one of the questions, can a small scale manufacturing come under SBA, and can SBA give loans without collateral and a small amount?
Well, manufacturers themselves are definitely eligible. Our collateral policies. Okay, so again, this is maybe more details than you want, but for some of our programs, we have an SBA Express program. That's a program where we delegate to the lender the underwriting, what they call the underwriting decision. And in those cases, we let that lender default to their internal policy. So there may be some cases for very small loans like that, the lender may not require. Oh, I should say under the 7A program, we don't require collateral if the loan is 50,000 or less, but that's what we allow, but the lender may still require it. So it will depend on the lender. But there might be some cases that I don't know. I would say as a general rule, when you're getting a business loan, the lender wants some kind of collateral. They want to see, yes, something to secure. They don't like making unsecured loans. So I would say the likelihood that you're going to get a fully unsecured loan is not high. They want to see something that will help repay that loan if you default.
Okay. And I apologize if this is in regards to what you just showed us. I was multitasking. So, is it possible to find industry data ourselves for free?
Oh, I looked that up because I was doing a separate PowerPoint on financial statements, and maybe Sheila, you can help me with it. So I looked the Risk Management Association. I went to their website, but I believe you have to pay for it. Oh, and I guess I'm showing my age, but the other thing I thought of was at libraries, you may be able to find at your local library some sort of access to the risk management data. Do you know if that's
That's
still?
I don't know for sure, but that's I don't do direct advising myself. But yes, that sounds feasible to me. I would say if you want the person who posted that question, send us an email at the Capital Pathways at virginiasbdc.org, and we'll definitely get someone to help you with that. So,
Yes, yes. They're the experts there, so they should be able to either
exactly.
provide it to you or give you that, yeah, give you a link, so
Yes,
something
and
like that.
also your local SBDC advisors can help too. So we have lots of help we can give you.
Right, right, right.
Um, let's see. So next question is, I might have missed this, but can you be denied because of credit?
Well, I would, the lender, as I mentioned earlier, is going to get a copy of your personal credit report, as some of them will get the copy of the commercial credit report. And if they see slow pays, past dues, it's not going to go well. It's going to be, the other thing we haven't talked about is credit scores. SBA does not set any minimum credit score, but the lender will. And they each have their own scores. I mentioned that microlenders will often allow lower scores. Some lenders you might go to will say they won't even consider you, if you have maybe 650 or less. It would just depend on the lender, but I would say that is going to be a potential obstacle to getting a loan. If they see that you have had, past dues on your credit report, or a very low score, that's going to be a challenge. It's going to
Okay.
be, yeah.
Let's see. Is the loan guaranteed?
So yes, the way our programs work is that we provide a guarantee to the lender. The lender does not go to the borrower, it goes to the lender. So what that means is if you default, we will reimburse that lender for a portion of their loss, and that's a way that we are encouraging or inducing lenders to make small business loans. So it's a way to uh, they might have a good candidate alone, but there's something in their internal bank credit policy that will not allow them to move that application forward. There might be cases where if they had the guarantee, they might be willing to do that to help offset that risk.
Let's see. Next question. Can a home be collateral? And can you give like a short list of other things that can be considered collateral?
Well, a home definitely can be considered collateral. Yes, lenders love love to take personal residences collateral, so that's definite. And lenders also like what they call fixed assets as collateral, things that you can touch. They will focus on that. So real estate, equipment, uh, are the main ones. They will look at other things like potentially they'll do is take a sort of a blanket lien, potentially a UC, they call it a UCC lien on all of your business assets, which could include things like your business inventory, uh, accounts receivable, things like that. Those are considered intangibles, and some lenders will not require that. It'll just depend on the lender, but uh, those are things that would be considered collateral. So either business assets, fixed assets, or then again I mentioned they definitely like personal residences, and then if you happen to own an investment property personally, they would look at that as well.
Okay, great. Let's see. Are agriculture-based startup businesses eligible for any of these loans?
Yes, they're eligible for all. So definitely for 7A, I mentioned the uses, the eligible uses. So, real estate equipment, all of that, working capital. On the 504, again, that's limited to only owner-occupied commercial real estate and heavy equipment, but they are eligible under that program. And then uh, I don't see any reason why they wouldn't be eligible under the microloan program. I will mention two things related to agricultural businesses. One, the SBA loan cannot finance anything related to the living quarters, the home, a personal residence, or anything like that. We can't finance anything like that through the SBA programs. And then the other thing we see sometimes is related to agriculture is the applicant will come and they'll say, I would like to get a loan for, I don't know, I'm just going to make up a number, 100 acres, but my business is only going to operate on 20 acres. The SBA loan can only finance the 20-acre piece. We will not finance the large piece, even if you tell the lender, well, I have plans, I'm going to use the rest of that. Uh, I mean, unless that's immediate, they will only finance the 20%.
Okay, that's good
And
to know.
I'm sorry, I should say the USDA also has, I mean, as you can tell by the name, U.S. Department of Agriculture, they have their own lending programs. So you might want to check there as well.
Thank you. Next question. If I am not very liquid but have a substantial amount in my 401k, will that help improve my chances in being approved for a loan?
It's not really going to help you because 401ks are not considered liquid. And in fact, the lender can't take a lien against that. So I doubt that that's not going to, well, I mean, and we're not encouraging this by any means, unless you're going to pull some money out of that's cash. That would, you could use that for your business, but just the 401k itself is not going to really.
Okay.
add any value there.
Okay, thank you. Let's see. Can you select certain assets to guarantee, or are all of your assets and your spouse's assets up for grabs?
Okay, it sounds like this is specifically related to only personal assets, not business assets. So in terms of personal
Yeah.
assets, the lender will generally look, they're generally only going to look for your personal residence or again, any investment properties. So if they're held jointly, uh, potentially the lender's going to ask for that as collateral, likely, especially on our larger 7A loans, they're going to ask for that personal residence or the investment property as collateral. So I don't know if the concern is, if the spouse is not involved in the business at all, there is a requirement that they sign a limited personal guarantee, but only subject to that personal residence or that privately held property. So it's not like the spouse is going to be on the hook like the owner of the business is. They just are providing a limited guarantee specifically tied to that real estate.
Okay. Thank you. So the question back on the 401k, I think this is probably the same person who asked before. What about a Roth 401k that I can pull money out of?
Again, that's your choice. If the lender can't take that as collateral, and I don't know that they would encourage you to pull money. I mean, I would say most people would not encourage you to pull money out of your any 401k, but that's your choice. And if you want to do that, you could tell the lender, that you're going to do that and that you have that amount to inject. You could discuss that with them.
Okay.
So that in terms of liquid, I mean, if it's liquid as cash, that counts as an equity injection.
So let's see. The next question, let's say someone needs to take out a $100,000 loan. Will their lease length make a difference in payment terms?
No.
No.
No, I would. That requirement that I mentioned, SBA requirement, is basically so that the lender has access to the assets in case there's a default. That's why we require that lease term uh, equal the loan term. It's not really related to anything else. Just so that the lender has access to go in there if the business fails, for instance, and get that collateral and liquidate it.
All right, we have currently two other questions, and we do have time. I'll go ahead and ask. Let's see. So this one is just to be clear, you mentioned that gas stations and truck stop startups can get 504 loans, but they have to have 10% plus 5% if less than 2 years. Does that mean being incorporated like an LLC because it's a startup, and then an additional 5% because it is a gas station?
That's right. That's right. So a gas station convenience store like that, if it's less than 2 years old, that would make the 10 go up to 20. The 20 would be a 20% injection. And then in terms of the less than 2 years old, I mean, I've had people call me and they set up their corporation or something 5 years or 7 years ago, and they're just starting to generate income. I would say, you know, they essentially they just let it sit there. They didn't like they got an EIN or something. They just let it sit there. Um, if you're in a situation like that, they're probably going to look at when you started generating revenue. But in most cases, for most people, you got your EIN and then you went immediately into business, so there wouldn't be a large gap there. But I've seen people where they obtained an EIN and then they really didn't do anything, and now they're right now going to start generating revenue. Yes. So I let the on the 504 program, I'd let the CD talk to the CDC about that, and they can advise you on that.
Thank you. We have one last question. So can one person that owns two different businesses and they're different, one's IT, one is agriculture. Um, so can each business have its own business that has its own business structure and it's totally separate? Can they get two different loans for each business?
Yes, as long as you're not. So there is SBA under the 7A. Well, actually, again, this gets confused, but under the 7A program, there is a maximum, what they call guaranteed percentage to any one borrower, which is 3.75 million. So as long as you're not near that, you can get multiple SBA loans. You can have multiple SBA loans. You can have, two 7As, you can have a 7A and a 504. We see that a lot. I mean, one example we see a lot where a lender will make what they call a term loan. That's where you have regular principal and interest payments every month. And then the lender will also, in addition, give you a line of credit. So you draw on it and pay it back over a period of time. You can have both of those, and they can both be SBA loans.
Great. Thank you, Ford.
Yeah.
Right now, we don't have any other questions, so I'll put a last call out for questions. And Ford, I'll ask you if you have any last words of wisdom for our
Well, I'm
viewers.
going to, for that person that asked about Northwest Federal Credit Union, I'm going to look that up
Oh,
because
fabulous. Thank you. We
they
have
asked
time, so
about
that's
that.
great. And I'll remind everyone, if your question didn't get answered, please send us an email and we'll make sure that we get your questions answered. And Ford, I know you're still there. You're at your other monitor, right?
That's right. I have to go over to this other monitor to pull it up. I'm still here.
You
I'm
definitely are a wealth of information for everyone.
What I'm having trouble is okay, that's the problem. Northwest Federal Credit Union is two words, not one word. I was typing one word, so okay. Okay, well, according to our records, they are not an SBA lender.
Okay.
Uh,
I
so,
appreciate you checking.
except something weird is going on because in our system it's two words, but when I go Google it, it's one word. So I don't know if I'm missing something here.
Yeah, I think it's one word.
All right. Okay, let me see. I may have made a mistake, so let me see. Oh, okay, here I found it. Okay, I found it. Okay. So let's see. Okay, so that credit union, and it is one word, Northwest
Oh
Federal
yes,
Credit Federal Credit
our
Union.
yes, our questioner he's still on here, or he or she is still on here. So Northwest, one word, Federal Credit Union.
Yeah, so they do have the basic agreement needed to submit SBA loans. So let me see if I might be able to find their history. Now, again, this may not be available to you, but let me see if I can see what they're. Okay. It looks like they haven't made an SBA 7A loan in a few years, but that doesn't necessarily mean anything. You could still reach out to them. And then I mentioned the 504 program where there's a lender involved. They have participated in that program as recently as this year. So I wouldn't think there'd be any harm in reaching out to them. They have the basic agreement and yeah, so you could talk to them.
Great, thanks for checking on that. I'm glad our attendee was still on with us. Okay, so last words of wisdom, Ford, before I wrap us up.
Oh, actually, if we have a second, I'm going to confirm about the car wash. Unless you want to cut me
Sure,
off, you can cut me off.
I won't cut you off. We have 6 minutes.
Yeah, okay. Let me just see. I should be able to.
I love that you're checking on the questions that have come in today.
Yes. Yes, I was right. Car wash businesses are considered special use properties. So under the 504 program, that the injection would go up by an additional 5%.
Okay.
And then I don't, in terms of last minute comments, I think we gave you a lot of information there, so I'm not sure I really have anything extra to say except wishing you the best of luck in your endeavors. And Sheila's there. Sheila's group is there for the guidance piece. So they're the experts. They do it every day, and they can help you. And yeah, best of luck with your application.
Great. Ford, thank you so much for your time and for the excellent information and for going the extra step and looking up the answers to some of those questions. We really appreciate it. And then I want to let everyone know that our time together has come to a close. The recording of today's session and slides will be shared as part of a follow-up email that will be sent to all participants within a week of this webinar. Again, if we were not able to respond to your questions, please send an appointment request through the website or the Capital Pathways email, and we will be sure to help connect you to resources that can support your business and your business needs. Thank you very much. We hope to see you all at our future webinars. I'm just going to check the questions because I see a couple things popping in. And it's just many thanks again, Ford, for your time and great information. So we hope to see you all at our next session. Take care, Ford, and take care, everyone.
Thank you. Thank you,
Bye.
Sheila. Bye.